daily, you go to 1 hour to take entry, right? It is, if you are marking 4 hours, you also go to 15 minutes to take entry, right? Again, that's how I trade. And it works very well. So you can see now on the daily, even though we didn't come to 1 hour, but merely looking at candlestick to say the previous candle did not take out the previous low. I said that if it comes to this area, we will not look for, if it breaks this area, you don't look for buy, because it's going to take out all the liquidity, all the trend line. When it takes out everything in here, that's where you can then see if it takes out this area close above it, maybe it may not necessarily come and take out this area if they want to push price to this area, right? But obviously, we don't expect that price to retrace, right? If it retrace, this area that I box should be the maximum limit. If it does anything different from that, we are not interested in taking the buy, right? So let's now look at what the 1 hour structure is saying, right? For you to know what to trade in 1 hour. You already seen the bigger picture. So let's see, this was where there was a break in structure in 1 hour, right? So this is 1 hour break of structure. So I would say this is 1 hour bust, right? So when there was a break of structure in 1 hour, this area, again, this is a valid high, right? Again, I don't need to explain that, but you explain. So this is where there's a BOS. Now look at the candle, this candle that broke the structure, even though there's a bit of rejection, right? That's the candle that broke the structure. But this move now, come and see. So this is the low of the candle, this is the high of the candle. You can see that the market is just ranging, right? So it can come back here and then get to this area, or break up and then continues to go high, right? So it's not clear in 1 hour. 1 hour, is this a valid high? So let's check if it's a valid high. Where we're going to pick as inducement, right? So this is, look at this green candle, broke out from this candle. Then this candle retraced and took out this. So this is 1 hour inducement. So normally you would not buy until this area is taken out, right? So this is an inducement, meaning that this is the first pullback, right? So whatever market is doing up here is not your business. You are waiting for it to take out this area. If it takes out this area and there's a bodily closure in 1 hour, you will not buy yet, right? You then look out for where can you buy 1 hour, right? So let's see unmitigated order block, for example. If you adjust it to this week, for example, this is the last bust up, right? It has been mitigated. If you take it to the next order block is this one, because it took out the red candle blue. Take it to this area, and it's a valid area. Why? Because you can see that there's an imbalance, right? Just small imbalance in there. If market comes, so this is a trade. If it decides to retrace, so we're going to take entry in here. If you trade, and let's say this is about, so because usually I don't like to trade with a very tight stop loss, right? So, you can decide to put it in here, but it has to clear this spike also. Just give it a bit of room. You can do 30 pips, right? This is 32 pips. Give it a bit of room, right? Now, this is how we expect that we'll take a buy. If it doesn't do this, we're not interested in the buy, right? So we expect that it's going to come in here. Now, we know that it's going to get to this area, right? This is 176 pips. But when we're trading this way, this will be because this place, when it closes below this area, this is a valid high, right? So we're going to take, so you take partial profit. Let's say you want to hold the trade. We're going to take partial profit here. So why you take partial profit in here is that if market clears this liquidity, for example, if it does something like this, let's say it does something like this, this way. You know, in this case, he just took out the liquidity. Most likely, when market does like that, it will come and can come and take out this low. So that's why usually when you normally this is your take profit, right? Let me see how many pips, because this is the valid high. If you are trading, if you enter from this point, let me just give allowance with all of the spread. You take it from this point to this area. This is about 93 pips. So 93 pips is about 1:3. So you should be fine. But let's say that because you know that the market is going to go higher, you want to trade it, you know, to this high, because this is a weak high. This is a weak high on the daily. So this is, as a matter of fact, I'm going to have a pending order in this trade. If it comes back to this area, because if it doesn't buy to the upside here, you don't take a buy anymore. Leave it, because this is a trend line liquidity. Once it comes and it breaches this area, because look at this candle. This week of this candle are taking out this liquidity, right? So it has traded, see, that's when you know that you will not buy. This is called an IFC, this candle, this green candle here. This green candle, the green one, it's called an IFC, that is institutional funding candle. So this, he had swallowed all the previous candle, right? So this is a valid buy entry. So if I had seen this, for example, you know, this is a buy before market went up. If you look at this week had come back. If I refine it to the week of that IFC candle, if I refine it here, you can see that the week also touched it. So you don't have, there's no trade here, right? If it doesn't buy from here and goes higher, then you look for sell entry, right? Even though this is a break of structure, even though the value change in character on the 1 hour would then be this point, right? So if it comes back to this point, this is a chalk in 1 hour, right? So if it's a chalk in 1 hour, you then trade it in terms of the sell. You trade it to the daily decision point, right? Until there's a 1 hour chalk to the upside in terms of buy. So this is for EJ. So I will check if we have another pair you've dropped on the chart, I'll pick it. But this is what we'll be looking at for EJ. So I'm going to drop this on the market review group and see if it comes back in here. But we're looking at this area to buy, right? So if this buy setup fails, the only time we will then look for a buy, because in terms of structure, is until this chalk, we see a bodily closure, we then say this is a confirmation that is coming to the downside. If the only way we'll buy again is that we see a candle does something like this. We see that there's a candle in here. It came to this area, took out this, took out this liquidity, and there is like this. Then we can take a buy, but our buy, the stop loss will be very tight. We'll take it because if it comes back below the week, we're not interested. You don't need to hold it. You don't need to adjust stop loss. You allow it to go, right? But now the bias for EJ is it's a buy, right? 1 hour, and this is the entry. If it doesn't come here, we're not interested. If it doesn't come to this entry, this is what we'll be looking at for. We'll wait for it to break this area, because now this high is not confirmed, right? This is not confirmed because this is the inducement. You need to take out this one to confirm that this is the high. It means that if it doesn't come back to this entry, this is because we may not have another market review before this plays out, right? This is what you then need to look out for. You need to look out for, if it does something like this, if it comes up, then this becomes the inducement, right? This area. So it needs to come back in here. Then you can take it buy to this point. So let me explain that. So it needs to close above this high. If it closes above this high, your inducement will move from this point to this point. And you need it to take out this inducement. If it takes out this inducement, you can then, it means that your high would have shifted from this point to this point, right? So this is a confirmed high. You can then, if it takes out this inducement, you can take a trade. If Then if there's a bodily closure below this area, this is still a valid entry for you, right? We're simulating this one because this is not the confirmed high. It needs to take out the inducement for us to say that it's a confirmed high, but this is the setup, right? So let's just quickly check another pair. So I'll share this one on the group and see how it plays out. So this is EJ. Since we have dropped EJ, so let me just stick to the JPY pairs, right? Or do we have any other pair? We'll do 3 pairs to end up. So I want to do the pair that we are trading. Which other pair do you want us to do? Gold. Say that again. Gold. XAUSD. Okay, gold. Okay, so that's fine. We'll do it from Forex.com. Just a minute, it's trying to load. So last week we had said that gold is bullish, right? So I will just take it from daily. We looked at it from weekly last week, but let me just take it from daily. So because I'm taking it from daily, I'm interested in, so see how it is, right? If you see like this area now, this, normally if this price accumulation gives you a good area in terms of break of structure and everything, you can mark only this area, right? In the time frame that you're in, right? So but don't worry, let me just take it from the major structure so that it's very clear to all of us. So I'll take it from the bottom of the move, right? And I'll say that this is a BOS because this in itself is a valid high. Why? We can take this place as an inducement. The market needs to retrace to take out before you say something is a high, right? If the retracement does not take out the first pullback, you don't mark it. So this is it. This move here is like a single line move, right? Single line move to this point. So I'm interested in the major swing. So just 1 minute. Okay, so this is a BOS. The next BOS is this area, right? So this is now. Why is this point a valid high? This is an inducement. So this is an inducement, right? The first pullback. Market needs to take out the first pullback before you say that this is a high. Otherwise, it means that there's continuation. That high is not confirmed yet, right? It has to move. So this is a high. So what are we then looking at for? So let's look at what is happening in this area. This area was giving us an indication that markets, because if you look at it, within how many days? Look at that's also how you also gauge market momentum. Look at it. This is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. No, 8. That's just a week plot to get to this area. If you go and count from here to this area, and we check in terms of pips, this is more than 2 weeks, maybe getting to 3 weeks, right? And the movement cannot be compared to just SSL1. So you can see that there's a bit of weakness. Okay, but without going into those technicalities. So this is a break of structure. This high here, by our trading plan, again for this review, right? Because we trade differently. This is not a valid high. However, somebody who understands IFC would have traded this one because this is an excuse me. This is, even though this high is not confirmed, right? This is an IFC candle, right? Look at this candle. It had swallowed the previous candle, right? So this is a very strong trading signal, actually. If you are trading and you see this kind of candle, most likely market will go, if you are trading in the direction of the trend, market will go there. You can see it came back to this area, just picked it and moved. That's a very strong trading signal. But again, let's come back to our review. This is not a valid high. Then when it got to this point, this is the first pullback, didn't get there, right? So this is not a valid high also. This area, it got to this area. So this is an inducement, this area. So this is an inducement, right? So now because market retraced and took out this area, this is then a valid high, this one. Excuse me. So this is the valid high, this one. So now let's do something. So this is a valid high, but if you look at this very critically, even though there's a bodily, let me adjust it. Even though there's a bodily closure, but because the rejection is also very steep, right? You know, you want to see, before you say it's a break of structure, bodily closure, you want to see a very strong bodily closure. So in this case, I would say that even though this is a break of structure, I would then come to this point and say this is a high. You want to take your high, transfer your high to this point, right? Because this rejection is very, very steep, right? So I would say that this high, this one, for us to, you know, continue to buy, let's say we don't know what has happened in the market, right? So I would say this is the high, right? Oh, what's happening? 1 minute. All right, I touched something. Okay, so this is the highest. All right, so let me just adjust this slider away from my screen. 1 minute. In here. All right. So all right, just to confirm, you can still see my screen, right? Can we see my screen?
Yes, yes.
Okay, great. Okay, so this is the high, right? I wanted to just type high before the chart just malfunctioned. So this is a high. So because I moved this high from this point to this point, then this is the inducement, right? So this is the inducement. Your inducement will also move to this point. So because it closed below this area, this high is then confirmed. Now, since it is confirmed, look at it. It means that between this high and this high, it is until the market bridges, there's a bodily closure normally. This area, this is where we say there's a choke. So even though we're selling gold here, it's actually a retracement based on this markup, right? Now, look at where we would have gotten our first entry. I think we also looked at it when we were analyzing the market last week. This is this area, this one, let me mark this area so you understand what I'm saying. This one is an IFC candle, right? But it has been used before, right? This green candle. This market came back here. So this is the only unmitigated area. This other block, if you take it from the fair value gap in here, right? If you take it there, still fine. So this is the other block, right? If you, let me adjust it to it. This is the only unmitigated area. It adjusts to the other block itself, this one. There's a fair value gap, right? So what happened? It came in and picked this. If it had closed below this area, gold would have sold massively, right? So this next area, this is about 1622, because that's the next area, right? This is a break of structure. Would have come to this area to earn this the liquidity in here, 1621 area. But it couldn't breach this area and it went up. Now let's say you missed this trade. This is your entry, right? You missed this trade. And the moment this is on the daily, this daily candle close, see what will happen. There's an IFC candle in here, right? So this daily candle, if you adjust it from here, this is even though market did not come back, right? This is a very strong, this place, this green candle, right? It's a very strong area. If market comes back here, it's going to be very hard. If it comes back, for example, in this place, if before it will bridge it to sell, it's going to buy, right? But that's not our interest. Our interest is to see what the market is currently doing. So let me take it back to the other block. Okay, so this is it. This is a buy signal. This is where it bought, and rightfully so, because it's buying. What is now this? This is now a weak high, right? Because until anything happens, it's supposed to come and break this high. To say that there's a continuation, because this is the latest high. So this becomes a weak high because it had peaked the buy entry from the last POI and it's going massively, right? So I already know that this is a buy. Now, on the daily, on the time frame, the fact that it mitigated a POI and it closed above this area, this is just an internal, right? So this is a confirmation, this area that it broke above. Within that same time frame, this is just internal structure, right? Just for the purpose of explanation, this is a chalk, right? Why is it a chalk? If market mitigates a POI and takes out the pullback, this area, is a confirmation that market is going higher, right? Now, if you want to trade, let's say you see a chalk, you want to trade, what will you trade? Usually, I trade, if you look at this now, there will be a lot of price action on the daily before anything will happen. Because the way it is now, let's say market wants to retrace. In terms of valid pullback in the sense that a candle that took out the previous candle low, right? You can't see that in this move, right? You can't see that. If you come to this area, you can't see it. So meaning that if this market, if it were to fall now, ordinarily we expect that to come to this area, but it's not possible, right? Because it has a mission that it needs to accomplish. But what are we going to do? We'll then go to our trading time frame. We already know that this is bullish. Number one, it mitigated your POI, the daily. This is a weak high. This is a target, for example. This is a target on the daily. Then it's coming high. It has also given you a double confirmation, meaning that it has closed above this area. So this is a chalk on that time frame, right? On the daily. So we'll go to 1 hour, right? We'll go to 1 hour and then see what we can see. So let's go to 1 hour. So this is the chalk I marked from the daily, right? So let's look at 1 hour and then see what is the picture 1 hour is giving us. If you want to mark structure-wise, maybe 1 hour, that's fine, right? So, if you're analyzing 1 hour, you're looking at this move. This is the move you want to catch. You are not analyzing the entire, this is where you want to catch trade, right? So let's see what we are seeing in 1 hour. Now, if you take it from this point, for example, this is it a valid high? Nah. So let's see what's the indication in 1 hour, and let's see where to catch a trade. Now, when this place, this area, now, this is, if market, this area, because this high, it will check it back. We want to see that the retracement took out the previous candle low. So normally, again, you can trade differently, but I'm just saying, this area, if this retracement got to this area, if we clear this area, this would have been a valid high, but it's not a valid high because the retracement, was not deep. It didn't take out the first pullback because the momentum was very, very bullish. It came up here and it's still moving. Now, so in this case, so let's check what is happening here. It cleared this, went to this point, cleared this area, and it's coming down. This is it. If market, so if market clears this area, so this is the inducement in 1 hour, right? This is a valid pullback. So if market comes here now and clears this area, it means that this place is a confirmed high. This is high in 1 hour. And until the price then goes above it, it doesn't give us a confirmation that you continue to buy, right? So, but this, it needs to take out this low. If it takes out this low, this is a valid high. If it takes out this high, then we'll then be looking out for where to take an entry. But let's even mark it 1 hour based on structure, and let's see what 1 hour is saying. Let's take it from the bottom, right? This area, this is not a valid high. It got to this area. So this, 1 minute. So usually I try not to mark an inside candle, but don't let me get too technical with the review. So let's say that this is a break of structure 1 hour, right? So say BOS 1 hour. We just want to see how deep it can retrace, right? Where we can take an entry. So got to this point, when it got to this high, this is a pullback, didn't get there. Got to this area. So see, let's see if this is this is a very tricky stuff, right? I want to see this red candle spike above the green candle. It has to be. This is very, very important. So the red candle above that candle. So yes, this is a valid pullback. This one, this area. This area, it's a valid pullback. So because market then took that out, this is then a valid high, right? Again, I think trading is a science, right? We need to also just pay attention to it because it gives us money, so we don't want to just joke with it, right? So now this is the area. This is a break of structure. This area, this one, I didn't see, this high, for example. This red candle, nothing here in terms of pullback, right? I can't see it. So if I check from the high to the left, I should see a pullback. So where I can't do retrace and took out. So in this case, this is not a valid high, right? Can't mark that area. So what is happening now is that it then went up, got to this point. If I check behind, it didn't retrace to take out anything. Then eventually give all this high. So except the additional price action, right? Between this, if it breaches this area, usually this area, this whole area like this, let me adjust this. It's coming down, right? Now, these are potential areas that people will be looking at for buy. But if it takes out this area, for example, if it closes below this area, for me, it's dangerous to take a buy in this area, right? Because, this is where we have a confirmed high. And it has to come back, it will come back to this area. Let's say it wants to come back, right? If it takes out all this liquidity, then if we take this 1 hour area and say this is an order flow, right? The last selling momentum before it broke out. So for example, it has not tested this order flow, right? It doesn't come back, which is where we have the break of structure, which is another flow. It doesn't come back to this area. So if it confirms, it will trace it, confirm that this is a high, this high, for example, I wouldn't want to buy, for example. I wouldn't want to buy until it gets to this area, right? That is, if I look at it from the 1 hour perspective, I would definitely allow it to get to this area. Because if it gets to this area and bridges this low, for example, then it means I need to come down to this area, right? So let me even take out this one, right? If it bridges this area, it means that it can get to this area. So it's very, very risky for me, if the way, again, maybe I'm too conservative, to take any trade in this area in terms of buy. I would only take it in this area, which is 1884. Let's say that it continues to come down. But in any case, it can come and let's say, based on trend line, there are different trading strategies, right? You want to then mark this area. So this one has been mitigated, right? We check it up and say, which area can you take a buy, a risky buy, right? This candle, from this candle, for example, to this area, right? Because in any case, why this is, even though it's a risk, but it has already taken out this inducement, right? If it comes to this area, if it gives a direction, right? Because this is an imbalance is in here. But why? Again, because we also have imbalances in here, imbalances in here. So it all depends on how bullish or how bearish this move is, right? If it gives an indication, because in any case, somebody who is trading based on trend line, right? You enter a trade, maybe it comes to this area. Let's say it gets to this area, you enter a trade. You would have taken the stop loss, right? For you putting it just below the trend line. So if it's sufficient and the market movers feel that they need to go higher, that's fine. But this area, you can look at it. This is about this 1959 area. If it gives an indication, yes, you can go higher. If it doesn't give any indication, if it breaches this area, I would not advise that you take a buy until you look at it, 1885 area. But let me quickly look at 4 hours, right? And see if the indication is different. Okay, so in 4 hours, let me just see this move, right? So 4 hours as well far. Okay, so in 4 hours, if you check it from the up, this is top. This candle took out the fee. So this is when it closes below this area, this high is also confirmed. It's coinciding with the high in 4 hours, right? When we check it prior to this move, you know, if you want to mark structure the right way to say that, for me to say that the high is a high, it has retraced to take out the previous low. You check this area. Let me see what is in here. Nothing, right? When it broke, no retracement. So if it takes this area, so we could have a trade. So this is 4 hours, right? Because maybe it should be the price will be too low depending on where the market, you know, leaders are taking the price to, for it to come back to this area, right? But if it comes back to 1884, you know, you can't put a bet that it cannot come back to 1824, right? So most likely, this is the decision point. If it takes out this low 4 hours, so what are we going to do? We're going to check, let's check the unmitigated areas. So in 4 hours, if I adjust this is the order block, right? This one. Because this is the one that gives you a fair value gap. If you check from the bottom of the order flow, which is the last selling move, this week, normally, if you bought this area, the next candle, this one took it out. It has been mitigated. If you look at what I'm saying, if I take it to this side, because that's how you mark, so that you don't just wait in an area where price will not get to, right? So this one has been used. So you adjust it to the next candle. You take it to this next green candle, for example. When it broke out, this candle had used it. This candle, this very, very bullish candle, very strong. And this is where the buy momentum came to this market, right? So if you adjust it to this area, this one, which should be the bottom of your fair value gap, this area. So this area, if market does not go higher from here, I think you should leave it, because, so why? This is this is an inducement. If market takes out everybody, most people, if you go to 5 minutes, 15 minutes, you see a lot of movement here. A lot of people, because look at spike, right? There's rejection. Somebody who look at this will just go and enter a buy. But you can't enter a buy just like that, because this is a pullback, and you want, you know, a market to take out this pullback first before you take a trade, right? So this is what we'll be looking at for. First area, just 1 minute, I want to adjust this. So this is it. So this is the trade. If it gives us that indication, right? And why drop the rectangle is your last bust stop. So this one. So this is, now, why are we going to be looking at these areas, right? One is that the top of your fair value gap is just below your inducement. So in this case, you are taking out liquidity here. You can pass this area and go higher, right? And move from here. So let me see how many pips is this one. This is about 260 pips. So you can move from this area. Alternatively, you can move from this area. This is to this high. This is about 331 pips. Then the final bus stop, if it doesn't move from the bottom of this area, this one, and your stop loss is just below, this is about 100 pips, right? Because this is 4 hours, right? If it doesn't move from this area back to this area, you don't, for me, I don't want to say as if it's a command to say don't buy. If it doesn't go from this area back up, I wouldn't want to take a buy again. It has to retrace significantly, right? Because those areas then become inducement. These are this area, for example, you can't take a buy in all these areas. No, it has to clear everything, then gives you a bit of comfort. Now, this is the order flow, right? So what does it mean? When you say another flow, what does it mean? People were selling at this price, sold at this price. So this is the lowest price they could sell to. And boom, from there, it took the buy order, picked it, and went up. So this is where the significant order came in, right? And that's why I said that if it doesn't buy from this area, the next place you should be looking at for should be this 1885 area, right? So again, this will be, my perspective on gold. This, if it bridges this area, we'll look at it. First area to look at for 1970, right? Second area to look out for would be 1964. The final bus stop, it will be around 1958. If it doesn't go back and come and bridge this area, please just answer off and allow it to do whatever it wants to do. All right. All right. Do we have any? Let me do one last pair. Kamoko had mentioned gold EG. Madam Ajoke, which pair do you want us to look at for? So we want to review pairs that we are trading, so that it doesn't become academic.
I think I became more good and organized.
Okay, good. Okay, so let me, I'll just do the last pair, which is, let me do EU, right? This is, looks like the oldest pair, right? A lot of persons, it commands a lot of market liquidity. So we'll just quickly look at it. So let me check it from the daily perspective and see what is happening. So if by the time EU peaks upward, wow, a lot of money in here, right? Let's say by the time it peaks, because these areas are, potential liquidity areas, right? If it peaks to the upside, for example, a lot of money in here, but let's even see what is happening. So let's take it from the structure, without necessarily marking so many areas. So this is a break of structure on the daily. So this is a BOS. Now, so it created this size. So this is the inducement. On the daily, this is the inducement. If your market did not take out this area, it's very dangerous for you to take a buy. Yeah, so because this is now a valid high, this area. So what has happened is that if we don't see price come to break this high, for example, to break this high, it means that it's going higher, right? Why? Because it has done a choke in here. So it did a choke because normally it shouldn't have breached this area. Should have just, pick the buy from here and just go, but the sellers are still in charge. So what is happening now? So if this is the case, to say that on the daily, this is a choke. Now, look at this area. This is a daily low. This. So this is a low on the daily. Why is it a low? The first pullback this area is why it's confirmed as a low. Market are taking the area. So market took out the first pullback. It means that that low on the daily was confirmed. Now, when market takes out this area, you then look for a sell. And again, this just butters the point. I'll say that if market, you need first bit when you're trading, you need to identify an inducement and how to mark a valid inducement. Afterwards, other block, other flow, first value gap are secondary, right? So once you know when inducement is, what is the liquidity? Once market took out this, you can see that it's sold because yes, this is where this one confirmed that this is the low. Now, if market break this area downwards, break this low, we say it's a continuation to the downside, right? But you don't know what will happen. Now, if you go and check it now, let's say, if this is daily, if I want to go and mark the structure this way, I don't want to mark this leg, right? I can go to 4 hours and mark the leg. But daily had given us an indication, right? Now, so if market takes out the liquidity, where are we going to take an entry? And let's just see. Usually, you want to check the areas that are not mitigated, right? If you, let's say you mark this candle here, you know, market had come back there. You don't have a fair value gap. This is actually where the entry will be valid this week, right? You'll be looking at this week, for example. But market did not get there, right? Because if you also look at it, this move here, this red bearish candle, all these things you are marking in here, they are like consolidation on lower time frame. Why? Because look at it, the high of this candle and the low of this candle, all those activities happen inside. So it's like consolidation, right? Now, and you can see that it didn't even get to that area because that's an inside move. But what happened? It took out this liquidity and came down. Now, since it took out this liquidity and came down, so what kind of trade are we going to be looking at? So we'll go through 4 hours, right? And see, because this low is a very big suspect. And that's for EU. And that's why I said we need to also monitor gold, right? Again, they may not necessarily work the same way, right? But if gold does not buy at that point, it could sell. Okay, so if you look at this now on the daily, we already know that let's say you want to trade a retest this week, price hasn't gotten there, right? Now, because this is also giving us an indication that maybe EU is going to sell. Why? This is 2 days. See how it moved, 2 days. 1, 2, you can see how it moved to this area. See, 1, 2, 3, 4, 5. 5 days. You know, the buyers have not been able to move price back to this area. Something that was covered within 2 days. And that's one indication to check when you're also looking at your buyers. So this area is for all you know, market can just, from this area, bam, to this area, right? Very, very fast, even within 2 to 3 days. Now let's go to 4 hours and let's see if the direction will be different. Now, if you go to 4 hours, because in any case, just 1 minute, let me check something on the daily. Now, let me try and, because I didn't mark the entire structure, right? I just looked at it from this area. So let me see. This area, for example, this week, right? It was mitigated before. So this was, we're seeing now, market had already breached it, right? So the other area that, let me see, I don't want to be sure that market had not mitigated the POI, right? Because it can also change the market direction. So this is an IFC, but there's a touch in here. If you adjust it to the week, for example, this area, price has not gotten there. You know, so this, this could be a suspect, right? So let's go to 4 hours. Now in 4 hours, what is likely? This is a low right? This is a daily low. And let's match 4-hour structure and see if there's any time frame coincident there. Okay, so this is, if I pick it from here, I'll mark it very quickly so that I don't take time. So this is a valid low, right? Because market retraced and took out this area. So this is 4 hours. Let me just say 4 bucks, right? Now, what happened? Came to this place. We came to this place. Is that a valid low? It came, broke this area. Yep. So this is a break of structure. But I want to move it close to where, okay, let me just take it. So, break of structure. Now, this low here, which is a chalk, right? In daily. This is not a valid low. It didn't retrace out to this area. So came back to this area, boom. So what happened? This is the next BOS in 4 hours is this one. Right? So in this one, this is BOS in 4 hours. Now, this is a low. And this is, in 4 hours, this is an inducement. Right? So you can see it. When it cleared, and I said that when market takes out an inducement, it's going to react because market moves based on liquidity, not necessarily based on other block. So when market takes out the liquidity, you can see it reacted. If you are waiting for another block in there, it will give you a little direction, then it goes higher, right? Because market moves based on liquidity. But in 4 hours, what is happening here? This is this area that is the daily liquidity, this liquidity inducement, in daily, this area. You know that this is a chalk in 4 hours, right? This is 4 hours chalk. Because that is this is a low, this is a low. So this low here is both daily and 4, right? So they're in alignment in this case, right? Now, this is a chalk. Now you don't know what you need now. So let me take out this that I picked from the daily. If this is a chalk in 4 hours, it means that you want the market to come back and break this area, right? So this is, then this one, let me say, this is 4 hours high. So why is it 4 hours high? It has retraced to take out, so this is a valid high. So if EU, for example, comes and breaks this area, you don't need to wait for this low again. It means the market has changed. This is the confirmation. One is that there is a chalk in 4 hours, but for you to have certainty that there's a chalk in 4 hours, this closure, this area, you want to be sure that on the daily is actually a closure. So let me go and check daily. And that's how you also know what will guide you, right? So in 4 hours, in daily, you can see that there's a bodily closure above that area. So it is an indication that market can boom to the upside, right? So let me come back to 4 hours. So, for example, if you are looking at, we saw weakness in daily, and I said 2 days, market move, this move here, this one, just within 2 days, right? This move here, that is still moving gradually, this is 5 days, right? So there's an indication that there's a weakness, right? So you don't know if this is a fake chalk, meaning that if it breaks this high, it's going higher, right? So if, for example, I want to trade this based on what I saw on the day, as a matter of fact, I was actually in the sell, right? So, see, this is the area. This is the last point. This is the decision point, right? This area to sell. If it closes above this area, it's fine. Allow it to go. How many pips is there? This is 4 hours. Even when you trade, it's about less than 25 pips. So it's fine. So I was okay with that. If I also go and take this area, and that's because of the weakness we could see on the daily. If you take this area to this area, the fair value gap, right? You can see that it's rejecting. So it's a small account, right? So I'm trading with a 0.01 kind of lot size. So this is the consequence of encroachment. We can see that it's showing a bit of weakness. It spiked above it, did not close above it. It came again, spiked above it, did not close above it. This current 4 hours candle had gotten there, you know, and it had not closed above it. So I know that I'm seeing weakness here, and still I'm trading this one. Even though I had seen a chop, right? But just based on if the market movers, I'm seeing a lot of good injection of buy momentum. I didn't see that because look at this bearish candle. So this is it. If you again you are trading probability is not since you don't over level, this is less than 30 pips. So if I trade this, for example, it's about risk reward. If I target this immediate low, for example, this is 122 pips. This is 1:4, which is very, very likely to happen, right? Why is it very likely to happen? I'll tell you why. And this is what I'm trading this actually, just to tell you. I'm trading this one. I had one order in here, the same stop loss, right? Now, that target is on this side because this is an internal liquidity if he ever comes back. Yep. So this is how I'm doing this trade. Now, this area, because I feel that market could come to this area. Now, this is an IFC, right? Market, though it came here and touched it, right? But the week here, it hasn't come. So if I see, I'm paying attention to this area. If market comes back here, because this is a low price, right? For buy momentum to be able to, this is about, I can even have a pendulum, I don't have a problem with that. From this area, because this is a low 4 hours and daily, right? If you break this area, is going down. But I see, these are the 2 instances I'm going to trade, right? This is 166 pips. This is, we are risking 30 pips. Because, why? It has shown this bearish movement is a concern, meaning that they actually want to take price a bit lower, right? And we move, and you can see a bit of struggle, right? Taking it higher. So this momentum is showing a bit of weakness. So I feel, again, it's a feeling, right? That's actually the news. You don't know what is correct until it plays out. So this area, market, I feel the market needs to come back here. Take this area. If it comes back in here, it means that this one is then the liquidity, right? It's sometimes it says an engineering liquidity, right? So this one. So if it comes back to this area, I'm done with this trade. Then the buy, because why this is a strong buy is that I can see this is a chalk in 4 hours. And until it breaks this area, it means that that chalk is then immaterial, right? Because it's then coming to the downside. But this area is a very strong area to consider for buy. But the way it is now, I'm willing to do this risk. What is the risk? The risk is that this is about 28 pips. This is about 43 pips. Let's say cumulatively it's about 70 pips, right? Let's say you're doing 0.02, it's about $14, right? That's one side. You're doing 0.01, that's about maybe excess of $7. Now, if it goes in your direction, this is 122 pips. This 12, let's say excess of $12, and this one is excess of just about 12. That's about $24, right? So again, it's a risk I'm willing to take, right? And that's because of the weakness. So this will be it. We've looked at gold, EU, EJ. We could do a bonus one, but I think that this one is, if, for example, for the week, let's say the biases are correct and we take the trade, I think we should make money, right? Because this is about, let's say it works out, this is about more than 240 pips in a week, we are fine, right? Again, but the reason we can see that there's a chalk, right? But in terms of the chop, this is the highest POI, right? When there's a chop, it has to retrace, right? If it gets to this area, this is the highest. For example, I can, even though it's a small account, I can do a 0.05 in years, $15, right? And that's because there's high probability that it will go to the upside. In any case, if it fails, it's fine. Right? It means the market will go deeper and have a better price to buy. But this is I would try and share this chart on the group. I think there's EJ good that we have looked at, and then see again, market is probability. But on your own, if you analyze any pair, you can also share with us other market review. If you feel you want to share it privately, we'll look at it together. But the most important thing is that you need to have a live account that you're trading, whether it's $20, whether it's $30. You need to have a live account. If you don't have a live account, you struggle to join trading sessions. Because, for example, we trade on a daily basis. I trade, right? Once I see the opportunity to trade. So it makes, what that does is that, you are trying to improve yourself. You are trying to check. If you get something right, you're looking at this, is validating your strategy. You're having discussion with fellow traders. You're learning, through the process. You're picking people's knowledge. You're adding your own knowledge, whatever it is. But if you're not trading actively, whether you're on demo account, the motivation on demo account is different from a live account. Over time, you will not improve yourself. So that's how it is. You need to be, if you are in, you are in. There's no two ways about it. You don't do it. Once you start trading with a live account, you can do a demo to backtest a strategy, but you can't be on demo, right? It doesn't work that way. The motivation is different, right? Over time, you drop off from trading, but you need to trade actively. So when you trade actively, it's going to be very obvious because it's either you share it there, maybe if you are trading personally, privately, and once in a while you check. These days, I'm looking at this point. Again, because we trade differently, people have different strategies that they deploy. What you'll be seeing, maybe the way I will see what you are seeing will be different, but overall, we may be seeing the same thing, right? So it's very important. But the first thing is that if you don't have a live account, if you are trading, if you are in a funded account scenario, that is fine. But still, go and have, whether it's a small account, go and have just 1 minute. So even if you are trading a funded account, it's fine, but have a small account that on a daily basis, you would make a withdrawal, you make profits, you make losses. So let me also tell you something. Again, there's no, everything we do here is so transparent, right? Why is it transparent? It's not a case where somebody is saying, come and pay X amount, let me trade for you, I will grow it in next 1 month, 2 months, there is ROI of 50%. So this is just pure, it's pure knowledge, right? So you are trading on your own, you're just getting a clue as to what you need to do. And because trading also works with our mindset, sometimes we can get it wrong. There's no trader, right? There are some times, even though some of us who also do this review, we have the opportunity of also training the academy members. Sometimes we could make mistakes, right? But the difference is that if you make a mistake, let's even say because of your emotional well-being, psychological well-being, you even blow an account. The difference between you having knowledge and you not having knowledge, or just doing anything, doing the guesswork, is that person who has knowledge had breached an account. In the next 1 week, is going to recover both the capital and the profit. It's just like that. But at some point, those errors will be there. Nobody will come and tell you. Sometimes you enter a trade, and because you head on to a bias, and you just still hold on to that trade, you go deeply in loss. It's normal. But what you use to measure a profitable trader is not that there's no red, it's that you are net positive, right? And that you are not using your life savings, put it in, you lose everything. And then when you exhaust it, you then go and get a loan and say, I'll get it back. That puts an indirect pressure on you. But you can trade, put money, you can withdraw on a daily basis. If you breach your account, you can take part of it and fund it, right? It is normal, right? And there's no one cannot be, you can't say, oh, I've not, no. As I said, this is purely, it's just a very real process, right? We tell you this is how it is, this is how you trade, you manage your trade, and you make money, you see money for yourself, right? So when you fund, as I said last week, that you should fund your account. Everybody should have a live account and you trade. For example, we've reviewed pairs. Let's even say that after this market opened by 10:30, let's say that all those reviews that we've done, you go and have a pending of whether it's 0.01. It's not possible that all those areas that we have said we're going to buy or sell, you will go wrong. It's not possible, right? Again, the market is what it is, right? It can do otherwise, but it's very, very, there's high chance that you make money, right? And it gives you a bit of joy, when you, for example, and that's why I just needed to give this last bit so that you understand. So last week I said fund your account. I knew why I said everybody should fund the account, and because I knew that the vibe was dropping. It's very obvious, If you are funding your account and you are trading, and there's a value had from the review, it gives you a big perspective and it's adding to your trading profit. You want to be at the lobby before the person who is leading the review is there, right? If you have to wait and call in person, it means that most of us were not actively trading. That's my assumption. I said, let's go and fund our account. You can review, take the trade idea that would drop. You can review on your own and share. We'll be able to give comment to you, and you trade. If you have lost money, it is normal with trading, right? And I give you a very simple scenario. Sometimes last month I've said that I think I had a 48. What was that analogy? I think it was $48, right? And I told myself $10 on that account. I'm fine, right? And that account, by the end of the month, it has gotten to more than 200 and something dollars, right? Now, in the month of this is October, right? And I said, no, the previous month, right? Because I was taking $10, I was leaving money on the table. Okay, let me even leave it to run in some instances, And I thought I was not making as much profit I was making the previous month. You can see it now. So sometimes you can have a money target and just stick to it. Whatever the market does is immaterial to you. And that is the best way for you to make money, right? Now, because that account had dropped to a certain level, part of what I've also mentioned to you, that based on the human and all those stuff, and when you also try to change a process that works for you, you could also see the other side of things, right? You can tell yourself it's $20, $5. $5 in 5 days is about $25. It gives it to you. So when I was doing that $10, again, usually I get to the office maybe 6:30, right? At most maybe 6:35. If I'm trading, for example, I noticed that even before 8, 9, I'd met that said I'm done trading. I'm not even looking at chat again, right? You will not know that I was trading. But when I then change it, you want to feel that there are a lot of money in the market, and you start seeing some ups and downs in there. So I'm just trying to give you this brief because some of us were also in that bucket, and this is a use case, and this is some of those experiences that we have. It is take profit is important, but it's also very important that you have a money target and an amount that when you get to, you are fine. It just gives you a lot of peace and gives you a lot of happiness because you are seeing profit. Now you can decide to say if your target is $10 and you had 3 positions, let's say 0.02, 0.01, and you did 50-50 pips. If you close one, it's already $10. You can take the other one to break even, and hold it, right? So that one is fine. Just So in that case, if it goes against you, you still have your $10, right? But again, if you don't want to put yourself through that stress, just take the money you want to make and leave it, right? Now, when I also told us that we should fund our account on Friday, and last Sunday that we had the review, I myself, I funded my account again, right? And that is also based on some of those things I had said and what could go wrong. Murphy's Law says that anything that can go wrong will go wrong, right? Now, I funded my Admiral account with 100K. That was on Thursday. Was it Thursday? No, not this one that just passed, the previous one. I know when I funded it, and I got the balance of $98 as 100K. And I told myself, I said, Kai. So I've not been valuing those $10 that I see, and I then leave it, maybe there's, because you want to then make it to $30. It's huge money, right? But it then became very clear to me that actually that $10, $15, because it's a small account, it's huge money within the Nigerian context. Because if I had done 100K and it's $98, So, but what then happened, right? And that's why I spoke to the knowledge, right? You have an understanding as to what you are doing. When something goes wrong, you know what has gotten wrong. If you don't know why there's a problem or why something has gotten wrong, if that's the trading, right? Even in your normal life, you are in a very difficult position, right? But what happened? Because I knew that I need to take back that 100,000. I can't fund from maybe a saving somewhere, right? The trading is a business, it should run itself. But what happened on Friday? I then withdrew $50, right, from the profit, right? Still left more than 100, so that account more than $117 or 107 account. I need to check. So when I withdrew $50 on Friday morning, I got the value of 54,000, right? And I looked at that and said, look at this $50 that looks very, sometimes you're in a trade and you then close $40. It looks like it's a small money, right? $50. But this maybe this week now, because I need to take back that money back to where I took it from. Because it should run, this is a business, right? But why I'm just trying to share this with us is to tell you that trading is, one is that you have the knowledge. The other one is that you don't know how to trade profitably, right? And when you take a decision that had gone wrong, you should know why it went wrong. So this is a validation for me to say that the best way to trade, right, except you have multiple positions and you can meet your daily target and take the other one to break even and just allow it, whether it goes wrong or goes right, it doesn't affect you. It's fine. But you should have a money target. As I take profit is nice, I can analyze this chart, for example, and say, I need $122. I can, depending, again, though I then have different account. One account just allow you to go, right, to take profit. I can decide to say it has done 70 pips, I'm fine, and I close it and I forget about it, right? You then have that control. So it is very important. Just tell yourself, depending on the size of your account, if it's $10 you are making, let's say that you have 20 trading days, that's about $200. Let's say 1 week is a bad week. And let's say at the end of the day, you're able to meet $10 for 15 days. $150, if you are still in this Nigeria, $150 will give you close to maybe more than 160,000. Again, if you have this takes just, because if you want to make $10, I'm not sure you should stay in the market more than 1 hour, more than 2 hours, if the setup is right, anyways. You shouldn't take that, right? And you are done for the day. You don't know that you are even a trader, right? Because you're not looking at your charts all through, you are fine. So, but I think that we need to understand this. Trading is just simplify trading for yourself. If you feel that, when you say $10, it looks very small. Some of us, if you have done funded account before, it looks very small. But it's not small anyways. If it's 150, imagine that at the end of the month, you draw down from your trading account 150K. 150K will do a lot of stuff for you. As a matter of fact, because the economy is not smiling, there are a lot of persons who will call us to say, my DSTV is down. Oh, this I'm out of data. Oh, there's the school fees problem. Oh, there are those kind of calls, those inflows of calls. You can't. It's there. You could have family, whether you are well to do or do well, any angle you are. There are people who call you. But imagine if you go and check. I'm not sure that those other costs, maybe they are depending on your profile. Maybe they are up to 60K a month, 70K a month. So trading, just maybe 40% of your trading income can sort that out for you, right? Let's even say that, again, if you go and get a bag of rice, right? I know it's maybe around 45, 46,000. So you imagine you made 150K in the month and you bought a bag of rice less than 50K. I'm very sure if you even decide to go and do all those chicken, if you kill about 5 chicken, for example, don't mind me, right? Some of those prices are in our head. If you kill five of those chicken, you would have spent maybe about 20K, right? Depending on the sizes. So if you are a mother or you're a family person like a joker, for example, 150K, you have done a float for like 2 months in terms of stocking your kitchen and whatever comes from the obvious the house and then the bonus, right? So again, there are different ways you need to look at trading. Trading is, I think that trading is one of the best things that have happened to me as a person. And the MD of Finspot, I am eternally very grateful to him, right? Again, I was discussing with my colleague in the office. I was telling him, I said, 2019, when in the office, our boss, which is Mr. Jire, would show us chart and say, oh, this thing, it was looking as if it was Chinese, right? Again, I was looking at it. Number one, as a person, I know that my skill set in terms of teaching and all that, it's an angle I do even while in school and all those kind of stuff. And I also know that it's, again, even though I'm a product person, right? But in terms of personal business, I'm not able to, I don't know how to sell, to say, oh, come and buy this, those kind of side hustle and all those stuff. But, trading is very private, and that's one aspect of it. Because I don't need to preach to you to see if I get more people, that's when I make money. No, it's just between my broker and my knowledge, right? So I think that is the best benefit that some of us who have gained, right? And to even say that, right? I know indirectly we did some other stuff, right? In terms of those early days that we're starting trading, in some academy, both trading and also bringing in people and all those kind of strategy that we did in the past. I would say that is just the indirect investment. But in terms of the skill set, a lot of us in those early days, we had acquired this skill free of charge, right? So he had taught us free of charge, right? Some other person that was also privileged to also acquire knowledge from. So we are very motivated, right, to ensure that all of you succeed and you make money, right? Because just the way, if you're a Christian, God has said that He had given you this thing freely, and also you self-extend it freely. You have received, freely you give, right? Even though these days now we're not, because you can see the indirect benefits, right? Because now it's not a business, right? Even though we have acquired it freely, now we are also giving it, but we are getting some add-ons in terms of benefit, reward, financial reward, in addition to the proceeds from our trading. So please, I encourage all of you, because I want all of you to trade. Trading is something that will give you lifetime financial breakthrough, right? Just be disciplined. Don't think that you want to make $1,000 within 1 week. Trade based on your expectation should be proportionate to what is your account balance, right? And you'll make a lot of money. It will not be nice that some of you, now, again, I've just given a little story of myself, right? And we had acquired this skill, FOC, right? A lot of you that you have come when, again, the academy is then full-blown and commercialized. You know, you have paid money to learn the skill. So your motivation should be higher than somebody who, for example, acquired the skill with zero or minimal cost, right? And that is the mindset you need to have, to say that I have invested money. It's not a do or die affair, we know that. But you see that this is something that can give you many skill, many benefits. Aside trading, the skill that you have, the skill that some of us have. And let me tell you, if you go and check people who trade and see how they trade, how they do markup, you see that some of the things you get from here, you can't compare, right? Aside the fact that you trade, aside the fact that you can also train people and get paid, you can also be invited to talk about trading. And aside the honorarium that will come with it, it will come with some financial benefit. So imagine that you truly develop yourself. It gets to a point where you are not even actively trading. You're not making money from trading. You are making money from public speech on trading. You are making money even from being like a brand ambassador to brokers and all those stuff, because your followership and your trust level will be very high, right? So without necessarily saying too many things, we wish everybody the very best this week. Try to fund your account and trade. Don't, if you are not too sure, you can trade with us. You can put it, maybe market review. If you feel that, some of us, we like to, maybe was very conservative and say, if I put it now, somebody says I'm wrong, because you have so many persons, right? It's not a one-on-one kind of session. And our response and reactions are also different. Emotional intelligence is different, right? You can also private chat anybody. It could be a fellow student, it could be a tutor. And that person will be able to say, well, this is what I'm seeing. Again, you could be right. Trading is a probability, right? Nobody knows for sure. If we know for sure, we will not trade with stop loss, right? And even when you're not trading with stop loss, you also know a limit to say, if it gets to this area, no, I'll just close it and move on, right? So, but I want everybody to fund account and trade. Don't allow the vibe to go, because this is a big money business, and don't be left behind, right? So, so let's wish everybody the very best. Trade with caution, trade with understanding. You have the knowledge already. Sometimes you trade, you make mistakes. To be as if everything that you've learned, everything that's gone, you want to go and re-strategize. No. Usually, most times when we lose money, it is the human error from us, not because of our strategy. If you go and check it, you see that either you have entered the trade too early, or you have not traded with a good confirmation. So if a strategy has been giving you money, it's not because of 1 week loss. You feel that strategy is now a bad strategy. No. But we can trade together, put it in the community, and let's tell you, take this trade. Even though it's 50 pips stop loss, you can do that with 0.01. Before the market moves 50 pips, gold can do that within seconds, right? But usually, it will definitely give you some upside and you make money. And let's say that if you want to do 50 pips stop loss, for example, 1:2, it will give you 100 pips, right? And you're fine, right? All right, we'll see you next Sunday, all things being equal. If we see that there's a lot of vibe that we are trading, we'll see that from the community, we'll see that from interaction. It's easy to know if somebody is trading, right? Because you also be growing in your knowledge and your understanding. If you're not trading over time, what you know will also leave you. Let me also tell you, there's a secret, right? Why you see that some of us or some persons have this skill of just teaching people, or maybe dropping an idea. That is the secret of mastery, right? I think when we were in school, when maybe some persons were a bit short-sighted, you go out for the copy notes, you go and hide it, all those kind of, to go to library, take it, change location of textbook and all those stuff. Usually, the more you teach, right, the more you master something, right? Because that's mastering. Once you do it over, it just sticks. You don't need to go and read it anywhere. It just flows, because mastering is that you are teaching people. And the more you do that, the more you master a subject. because different things, you'll be seeing different perspective, right? So that's how it is. Even in your place of work, it is in the, some persons, maybe because of mentality, maybe you're doing something, you're trying to hold it from your colleague. It's not job security, right? When everybody knows what you know, for example, it means that some things that are operational, they'll be doing it for you, right? Then it gives you headroom to do the next big thing for you to think. Because when you are then clogged down by operational issues, you can then think of the next big thing. But again, not many persons understand that bit, right? So the more you give out, expose some of those things to people, the more you're also growing your knowledge. You're mastering that art. So there's no risk, right? All right. Take care, everyone. Do have a blessed week. Bye-bye.